Have you ever considered investing in index funds? Peter Lynch, one of the most successful and well-known investors of all time and a mutual fund manager of the Magellan Fund at Fidelity Investments, said, "Most investors would be better off in an index fund." If you have been thinking of ways to reach financial freedom because you have been stuck in the 9-to-5 rat race, investing must have crossed your mind. Today, we will talk about the similarities and differences between some of Vanguard's most popular index funds, VOO, VFIAX, VTI, and VTSAX. An index fund is a type of mutual fund or exchange-traded fund designed to track or copy a stock market index, like the S&P 500 or the Dow Jones Industrial Average. When you invest in an index fund, the fund manager purchases the stocks of every firm included in that market index. Vanguard is one of the world's biggest investment management companies. It offers a wide selection of low-cost mutual funds, advice, and related services. We are going to focus on 4 of their top index fund products. The first is VOO, Vanguard's S&P 500 ETF. This is the pioneer index fund of Vanguard. It tracks the S&P 500, a widely recognized benchmark that measures the investment return of large capitalization stocks that include Apple, Microsoft, Amazon, Facebook, Google, Berkshire Hathaway, and others. The fund manager invests all of its assets or a substantial portion of it in the stocks that make up the index. Because of its low expense ratio of 0.03%, VOO is a good investment. An expense ratio, also known as management expense ratio, is the amount charged to investors to manage the fund assets and is used for administrative and other operating expenses. If you had $10,000 invested in VOO, it would cost $3 per year for Vanguard to manage the fund for you. The lower the operating expenses are, the higher the return investors get. We want to look for low expense ratios to enjoy higher returns. VFIAX is the Vanguard 500 Index Fund. It is the mutual fund version of the VOO ETF. The big difference between indexed mutual funds and exchange-traded funds is how they can be purchased. With indexed mutual funds, you put in an order and the purchase and the price is done at the end of the trading day, while with an ETF, the trade is done instantaneously just like a regular stock. And usually, there is a minimum investment amount when you first trade in an indexed mutual fund. With many of the Vanguard Admiral Index funds, the minimum is $3,000. With exchange-traded funds, the minimum is the cost of one share and can be as low as $20 depending on the fund. Just like VOO, VFIAX tracks the S&P 500. As of June 2023, VFIAX has a total asset worth over $887 billion, invested in 505 different holdings. The top 3 holdings include Apple, Microsoft, and Amazon. If you want to buy VFIAX funds, the lowest cost place is on the Vanguard website, because it is free to trade Vanguard funds there. You can also buy Vanguard funds from third-party brokerages that do not charge a fee for buying stocks like Robinhood. The VFIAX expense ratio is 0.04%. Unlike VOO, VFIAX is a mutual fund and the minimum investment is $3,000. VOO is the ETF version and you can purchase it with a minimum investment of the price of a share. VFIAX also has an edge over VOO in terms of investments and withdrawals. It allows you to automate your investments with recurring purchases. If you want to invest using a dollar cost averaging strategy like I am, VFIAX is a good choice. Let me know in the comments which one you think is better, VOO or VFIAX. Next is Vanguard's Total Stock Market ETF, VTI. It seeks to track the performance of the CRSP Total Market Index. CRSP is the Center for Research in Security Prices and it provides historical stock market data and it tracks almost 100% of U.S. stocks from small cap stocks to large cap stocks. VTI has an expense ratio of 0.03%, just like VOO. Lastly, there is VTSAX, the Vanguard Total Stock Market Index Fund. It has the same expense ratio as VFIAX, which is 0.04%, with a minimum investment of $3,000. The fund has total net assets of $1.4 trillion. Its largest holdings include Microsoft, Apple, Amazon, Tesla, Facebook, Alphabet, and Berkshire Hathaway. VTSAX is the largest mutual fund in the world. It also provides investment exposure to over 3,000 stocks. By diversifying your assets to the total U.S. market, your investment returns are not as volatile as holding just a few stocks. And it is very convenient for investors since they don't have to manage a portfolio of thousands of stocks. Instead, Vanguard manages it for you. VOO and VFIAX use the S&P 500 index, while VTI and VTSAX use the CRSP US Total Market Index. What's the difference between the two? S&P 500 includes only the 500 largest companies in the market, while the Total Market Index includes all of them. The small, mid, and large cap stocks are all in the Total Market Index. The CRSP index is more diversified and helps smooth out the bumps. It can also capture rising stars like Tesla before it was included in the S&P 500. Consider the following factors when choosing which index funds to invest in. 1. Which index you think is more beneficial for your investment style, S&P 500 or the Total Market Index. 2. Mutual fund versus exchange-traded fund. With mutual funds like VFIAX and VTSAX, you need $3,000 as a minimum investment, while ETFs, like VOO and VTI, the minimum investment is the price of one share. But mutual funds will allow regular automated investments. 3. Expense ratio. This is actually not a big determining factor since they do not differ significantly, but keep an eye out if you're looking at other index funds. There is no best time to buy an index fund. It depends on individual situations. Ideally, the best time is now, but in reality, you may have some debt to pay off first. Potentially, you can start with a little now and continue to add to your portfolio every week or every month. In a few years, you'll start to see how your investment is working for you. Index fund investing is low cost and convenient because it is managed passively, and you can diversify your portfolio in one investment product. You will free yourself from the hassle of picking individual stocks and studying the market or timing purchases. If you have more questions about Vanguard index funds, feel free to leave your questions in the comment section below. We will answer them in a future video. If you found this helpful, please smash the like button, subscribe and hit the notification bell. Check out our most popular video on wealth building and I'll see you in the next one.